The Real Build is about building better culture, leaders, visionaries, community to better serve the client. I'm your host, Bill Reiman, your broker builder, and I'm here to showcase real business owners building companies with integrity, trust, and a commitment to making a positive impact. Join us as we explore their stories, insights, and strategies for success. With that being said, welcome to The Real Build.
You leave this world behind, so live a life you will remember.
Welcome to The Real Build. I'm your host, Bill Reiman, your broker builder, and today I got another amazing guest for you guys. So she is a seasoned financial advisor with nearly 2 decades of experience. She specializes in providing tailored financial solutions to her clients. She is passionate about giving back and is highly active in our local community. She has served as the past secretary of the Neapolitan Chapter of the American Business Women's Association, was honored as a Woman of the Year in 2014, former board member for the Marco Island Charter Middle School for 3 years, a founding member of the Naples Chapter of Business Networking International, past chair of the Marco Island Relay for Life event. These are just some of this woman's amazing achievements. Jamie Berger, welcome to The Real Build. How you doing?
Thank you. Very well. Great to be here.
Yeah, I'm sorry if I missed anything because you probably have a lot more than that.
That is more than enough.
I'm excited to have you on though and talk financial health and just it's so important, obviously, that I mean we were talking about it prior to the show starting, how kind of money makes the world go round. Obviously, it's not the most important thing, but money is a tool. It's something that gets us ahead. It's something that advances us in life and business and all these things. So we're going to talk about that a little bit today too. So you are a local too, and also having you on too. We're both living in Naples too, past Marco Island residents. So this is pretty cool
Yep.
to do together here as well. So. Before we get started, I want to know a little bit about yourself. So who is Jamie Berger?
So I am a financial advisor, as you mentioned. I am a business owner. I have lived in the Marco Naples area since 1997. So been in this area quite some time. And I love, as you kind of read some of my bio, I love to be involved in the community. I love to give back. Also might be obvious that I have a hard time saying no. So that's but it served me well.
So your involvement in the community, you've done some amazing things with it. So how did that all come in to, how'd you get started, like Relay for Life, all these different things? How'd that all happen?
Yeah, so as you know, Marco's kind of a very small town.
Oh yeah.
So once you kind of join one group, I kind of found that somebody from that group would say, "Hey, have you ever thought about trying this? Or have you ever thought about volunteering here?" And it just led to more and more different organizations, charities, and some was for business networking purposes as well as giving back to the community and learning different skills such as like public speaking, doing the books for an organization. So some of those skills were great to apply into my business. And a lot of it was just a way to feel good about giving back to the community. And then also the networking aspect. So it kind of encompassed all of that.
Yeah, that's what I was actually going to ask you about too, because I need to get better at that, being more involved, doing more things. Like obviously we're members of the CBIA and stuff like that. But doing more events and all that because it's so important to get out there into the community, as well. And you're doing a tremendous job at it, but it's the network too. You're building your network, you're meeting new people, and yeah, I'm guilty. I need to get better.
Yeah, and I'll be honest, since COVID, I haven't been as great about it because a lot of things kind of stopped or went virtual for a while, and some groups kind of fell apart, or some are still not virtual anymore, but it's just not the same vibe. So I've been a little bit behind on getting more involved again since the last couple of years.
Yeah, so it looks like we both need to get more involved
Yeah.
together.
It's
We'll work
time.
on that together then. As far as financial advising, what led you to that path? Like out of everything you could have done, what led you to be a financial advisor? Because me personally, like I hated finance in college. Like that was like my least one of my least favorite things. Math, I was never a math whiz, but there's so many avenues in the financial world, and you can have a lot of success in it. I mean, a lot of the people we build houses for were in the finance world too,
That's
and
interesting.
so I want to know like what led you to that.
Yeah, it was not my first major when I was in college. I originally thought I would be a pharmacist, and after a lot of the chem classes, I just kind of was bored with it and I did not enjoy it. And the idea of standing at Walgreens, like filling a pill bottle all day, just did not sound exciting by any means. I was like, oh, that sounds awful. So, much to my parents' did not follow their advice exactly. And I just kind of started taking whatever classes appealed to me in my second year of college. And luckily, finance was one of those that I took and I enjoyed it right away. So, kind of figured out that finance was a better path for me. About my second year of college. So I continued with that. And then after I graduated, I sat for my licensing exams to become an advisor to take the tests that I need to be licensed. And then I started doing that on Marco in about 2007, 2008 timeframe. Um, and one of the things I was kind of drawn to it is when I was younger, my dad would we would kind of look at newspapers back in the day, and it would have like all the stocks printed out for the day of what price they like opened at and closed at. And we would look at that. He would just kind of show me, okay, if you put $100 in Nike, 6 months ago, it's $150 today, or whatever the math was at the time. But I just thought it was so interesting that if you had some money, it could make more money for you. And I just thought that was such a cool concept and kind of wanted to share that with others.
Entrepreneur mindset at a very early age, right there.
And it's probably because my parents were business owners. They owned restaurants in New York, and then they also owned a pet store in New York and a few other businesses. And then they got into real estate and restaurants in the Naples area also. So I was always kind of, um, I just loved working. Growing up, I was excited to go to work with my dad. That to me was fun. I was like, yes, there's no school today. I get to go bust tables. Like most people aren't excited at that at 8 or 9 years old, but I kind of was.
It's pretty cool, like how when you're younger, your paths and what you enjoy and what you do kind of lead and are fulfilled into what you do today, right? It's like for I've talked about with me, like, I used to love to build things. And my dad was in the construction industry, and I never saw it obviously the connection there. I just was very creative, had a creative mind. I would build things out of Legos or whatever, saying everything. And I would play alone too. I could play alone by myself for hours because I had a really good imagination, my mom told me. And it's like with you, like what you just said with the stocks, looking at stock market stuff at a young age too. Hopefully you invested at that young age back then because you're probably doing pretty well if you bought Nike
Yeah,
back then, right?
I think my dad, I want to say he gave me $100 and told me to choose two stocks. And I believe it was like Nike and Starbucks at the time.
That's
And
awesome.
then we had changed those over the years. But yeah, it was cool. It was a good
It's
experience.
it's those experiences though that kind of lead us and we don't even know it to where we are today. And now building houses and stuff like we do, it's very fulfilling to be able to bring something to life that I love doing the design phase of it. That's like my favorite. It's fun, and then you see it come to life and being involved in that. And I'm sure it's similar with
Right.
you with the money and stuff and helping people to make money and learn about money.
Yes. Yeah, and that's my kind of, I love people. So being able to interact with clients one on one, I find just very rewarding to see their progress also over the years of maybe saving toward retirement or getting to retirement and being able to enjoy the money that they've worked really hard to save and be able to spend it without guilt and to be able to move into that area is really exciting to be able to see and be along that journey with those people.
And I commend you too because like the world, going to school and stuff, we're really not taught how to manage our money through the school system. And it's like, even today, I've learned a lot on my own by reading and stuff like that. But I went to, even through school, through college, I didn't really learn the best routes of taxes and spending and money and how, and I think it's a huge problem with the world today is a lot of people spend money faster than they get it. Debt's at an all-time high. And the problem is it's not taught. And having somebody like yourself is, what everybody should do, in my opinion, is hire somebody like you because if they're not aware of there's just so many people aren't aware of what they're doing. I have friends that are in debt just because they spend fast, they get a chunk of
Mhm.
money and they're like, I'm rich, and then it's gone, within 2 months. It's crazy.
Right. Yeah, I think it's a major disservice that we do to the youth in our country by not having some kind of financial literacy within the
Hmm.
school system. I think, and also I think people copy what their parents have done typically with money, or they do the complete opposite. So you either see your parents make really bad choices and you might kind of follow in those footsteps, or you're kind of motivated not to do what they did. I see that quite often too. But I think some kind of financial literacy program within our school system would be amazing because a lot of people don't realize if you make 50 grand a year, you can't spend 75 forever. Like
Yeah.
that's just not sustainable.
Yeah.
Um, so I think just even putting together a real budget on paper as a student would be pretty eye-opening.
Well, especially today's world too, just because things are so expensive. I mean, it's
Mhm.
like you go to a grocery store, like an order of groceries over $100 used to be like, whoa, I'm spending a lot of money. Now it's like it's $300 and you're like, whoa, I'm spending a lot of money, and it's just a lot of people. It's hard to see how a lot of people are surviving just off basic income and stuff like that. Just off the total cost of eggs and food and just everything in general has just gone up so much. And it's like, it's heartbreaking in a way too to see. I mean, even our building cost and everything has gone up, labor cost have gone up, and like the labor strikes that are happening currently. At the shipping yards because affordability of living is so high, they're not getting
Right.
paid enough. Now they want more, but what's that going to cost if the union gives in? It's going to raise prices even more because the shipping prices are going to go up. So it's just like
Right.
a lose lose lose.
Yeah. It's just going to get passed to the consumer in the end.
Yeah,
Yeah.
exactly. Exactly. So it's hard to see. One thing I wanted to ask you too is you know, speaking of like challenges and everything, what are some of the challenges that you faced early in your career? And how did you overcome
Oh man. Well, I don't
them?
know if you remember the 2007, 2008 is when I got started.
Mm.
Being that you're in building, you probably remember the housing situation,
I
the
was
financial.
I was in car sales back then, so
Okay. All right.
even better.
Yeah. So it was a very challenging time to get started, I think. Maybe it was challenging, maybe it wasn't. I think it kind of was a good opportunity because a lot of clients or a lot of people were being ignored by their current advisor. Advisors weren't comfortable picking up the phone and being like, hey, I'm sorry, your account's down 30%. Just hang on. A lot of people would just hide from their clients, unfortunately, instead of being proactive. So being that I was brand new, I had a lot of time. So that's where a lot of those networking and uh, community organizations came into play. So I did a lot of networking to get started. But I think just kind of the time frame of 2007, 2008 was kind of a challenge, but also kind of helpful at the same time.
Back then too, like going off of what you said there, just it hit me because like when I went into the car business back then too, like I was young. I was turning 21 back then. So it was like I had no idea what was going on in the world. I'm 21. I wasn't paying attention really, I was concerned about making money, having a girlfriend, whatever it was, and it was I remember like a lot of the guys I worked with at that dealership are always checking their phones, always checking the markets,
Mm,
and I never really understood what they were doing, and they were just sitting there and they just hear them grunting and stuff like that. But I think that helped me in a way, not having that stress, not having any of that, because I did have a lot of success selling cars, but I went in there with no doubt in my mind that,
mm,
I'm here to sell. Like, and that probably was something that helped you because while everybody else wasn't answering their phones and they were avoiding the clients, you were like, I'm just here to get clients. Like, I'm starting out. Let's go.
exactly, 100%. And in 2007, 8, I was, I think, 23, 24 at that time. And, I then even looked probably younger for my age than I was. So I might have looked like 17 or 18. So, when you're meeting with a prospect
Yeah.
that might be 60 or 70 years old and you look like a teenager and it's the worst financial crash since the Great Depression, they're like, I don't know
Yeah.
if I'm going to give you my money. It took some time to build that trust with people, but luckily I was able to. And I remember I mean, it was definitely a slow grind to get started in this business. It was for me. And I did other things. I worked at Marca Movies actually in the evenings for a couple years in the beginning just to be able to kind of sustain myself. Um, but yeah, it's just a lot of persistence and perseverance and I just never thought quitting was an option. I knew that's what I wanted to do.
Mm.
I just kept going for it.
It's exact same thing. I think yeah, people probably looked at us younger, like, me being 20, 21 when I was doing that. But I think there was also like a comfort thing too with like when I was in that car business, like compared to a lot of the stressed out guys that I was working with, a lot of them were stressed out. They're smoking cigarettes left and right. They're it's like people would be drawn more to me because I was
Mm.
clean cut, looked like, and I didn't have any stress on my mind. I was just there to, sell a product and do a good job at it and learn about it and do my best at it. And that's kind of like with you too. It's like, coming in those moments where you have nothing to lose, right? It's like you really had nothing to lose. Like you didn't have a massive financial company and all these people underneath you that were calling you left and right, be like, "Where's my money?" It's just I think that benefited you and probably was the best time to do it because while everybody else was distracted, you were able to go head first into it.
Yeah, I think that was helpful. I also was young, just out of college. So, in a way, I was kind of used to not having a lot of financial resources. So, the fact that it took a while to be able to grow the business really didn't hurt me. If I was someone that was 40 years old trying to start that with a mortgage and 3 kids, it might have been a struggle.
Yeah.
But being that I was not in that situation and I kind of had the time, it was a little bit easier to do.
I wanted to ask you too, because a lot of my listeners are in construction, or there's even listeners that are possibly building houses, some in real estate and so on and so on. So, what financial tips would you offer somebody kind of navigating the process of maybe building a house or doing a remodel? There's a lot of that going on right now in our community.
Yes.
So what are some tips you would say?
Well, I know you're a builder, so I'm going to preface this kindly, but whatever the estimate is or the quote, I always kind of um, say to estimate it's probably going to be about 20 to 25% more than what that original number is. Not because the builder changes things, but sometimes the client decides that
Mhm.
they want to, as you know,
Oh
change
yeah.
things after you've already done the work, or material pricing changes, or whatever happens. So just to anticipate that it's probably going to cost more than you think it's going to. Um, that would be one of the biggest things. And then really just taking into account the interest rates, if you are financing, what that's going to look like. And if you are paying cash, just what does that do to your cash flow going forward also? Those are kind of the biggest three that I look at when I'm
Yeah,
helping a client.
they're huge, and I highly agree with you on the 20% more I would factor into the budget. I don't think a lot of people do that, and then it becomes an argument. But like it all goes into like with the builder too, or you yourself, like setting those expectations, right? Prior to
Right.
something happening. And I always do that too, because with us, we're super custom. We do a lot of high end, so it's like no house is the same. So I always tell them when I estimate your project, I usually shoot high. If you go
Mm-hmm.
higher, you're usually doing something pretty crazy. But there's also opportunity for you to save money too. So, but a lot of builders, I think the problem is, and remodelers, is they estimate low. They bid so low to get the job that a lot of people, that's where the bad rap of contractors comes into play too. And it's been a major problem. And a lot of people have a bad taste in their mouth about contractors. That's why I do the show. I'm trying to make it better because there are good contractors out there. I've had them on the show.
For
But
sure.
you're 1,000% right. That should be the first thing to kind of look at and really detail what those costs are. Because if they're giving you, I always say this one, if they're giving you like $5,000 for appliances and you're building a decent sized house, there's probably a
Right.
problem there.
Yeah, I just looked at fridges the other day and it wasn't anything fancy and it was about like $3,500 for the fridge.
Yeah.
So, 5 grand is not going to go very far.
And
Um,
I've seen that unfortunately on a lot of my competition's bids where they're like the client will go through match to match, they'll be like, well, they're at 10,000 and you're at or they're at like 15,000 and you're at 40,000. I'm like, yeah, yeah, I am.
yeah,
That you're not going to spend you're going to spend a lot more than 15,000 on your house and appliances. Really? I don't think, but it's explaining these things and detailing everything out. I have a call today to do that and go through with a client because I know the other builder that's bidding it and they usually undercut me quite a bit, but I know
mm,
how. So it's just like as a builder, you need to explain those things. And just like yourself too, how you're able to help these people out by saying, hey, this is what you should do, this is what you should look out for.
right. Yeah. And not trying to throw construction or builders under
You
the bus or
can.
anything like that. No, was not my intention whatsoever. But I think you are 100% correct in that sometimes people will bid way lower trying to just secure the job and then things escalate from there. Um, yeah,
No, you're 100% right though. It's not that you're throwing builders under the bus. You're calling it as it is. That's the way I see it too, because I'm not insulted. So don't, because we do things the right way. I've lost jobs constantly because I price things right, and I want people to go into it with with the, peace of mind that if they spend less, they're going to save money. I mean, that's just how we operate rather than, well, that's going to cost you more. It's constantly an argument. Um, and it just never works out in the builder's favor or the client's favor that way, too.
right. It just sounds a lot more stressful, a lot more tension,
Hmm.
not enjoyable. No one likes unexpected bills or costs. So I think, and probably people that don't choose to work with you and go with that lower bid probably have reached out and told you that they regretted it in the past, I'm sure.
I've had that. Yeah.
Yeah.
Yeah. But it's always like even in your business too, it's always you may not get every financial client, but it's always being upfront with them, telling them the truth, just and not just brushing them off because they're not willing to spend the money. And like for here's an example, like, I had somebody that came in, they had a low budget. I told them I couldn't accommodate that budget. They said another builder would. I said, go ahead with that other builder. Um, and I helped them though. I even said, if you ever need anything, you have my number. If you have questions about this other builder, call me. I'm happy to help you. Doing that
Yeah.
and playing the long term with with people, that guy actually said, my brother-in-law does pools. He does this specific guy's pool. He goes, I was going to build with RK Reiman and blah, 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 but I didn't because the budget. And my brother-in-law was like, oh, that's my brother-in-law. Yeah. And he's like, oh, he was great. He told me everything, what I needed to look for. He goes, if we ever sell this home and once I make some more money and he goes, we build our dream house, it's going to be with RK Reiman. So just like that right there, like doing those things and just doing business right, that's what it's all about.
Yeah, because that word of mouth will bring you so much business or stop a lot of business.
Correct.
That's your reputation is everything. So yeah, it could take years to build it and just a few bad mistakes to kind of hurt it.
Exactly.
So
Exactly. I wanted to ask you too, how can high net worth individuals like ensure that they're maximizing financial benefits of investments, like especially in like the luxury market we're in here in Southwest Florida,
mhm.
or people in general, how can they make sure that they're, maximizing their investments? Because I think a lot of people worry stock market's a scary thing. I mean, there's a lot of people in it. There's a lot of people that have gotten burnt by it. But there's a lot of people that do dumb things. I'm guilty of it. Like I thought I can control my own destiny in the stock market, and I was young. I was like very impatient, let's put it that way, and my
Mhm.
impatience lost me a lot of money. So let's talk about that a little bit.
Yeah, and with the market right now making new highs almost, weekly here, you see a lot of people that are like, "Oh yeah, I've started my E-Trade account. I'm up 30%. This is so simple. Like I'm going to retire in no time." And then we might have a correction here in the future. Who knows what might happen? But I always try to, when I meet with prospects or my clients, try to show them that if you're investing in the stock market, it's a minimum of a 5-year time frame to think about using those funds because you just have to have the time on your side for them to be able to grow. No one can predict what the market's going to do in 1 year, 3 years, or
Mm.
even 5 years. But there's a statistic that if you're in the market for 10 years, 92% of the time you will have a positive return. And if you're in the market for at least 20 years, there's a 100% chance you will have a positive return. And this isn't with all stocks, obviously, but this is looking at a kind of an index fund or a well-diversified mutual fund that encompasses just looking at the market in general. So I always try to encourage people that time is the biggest
Mm.
factor, and not also to discourage people that are older from starting. I always like to remind individuals that you'll never be younger than you are today. So
That's good.
waiting, yeah, I mean, waiting any longer doesn't help either.
I like how you said time is your biggest factor because I there's a lot of people that I mean even with cryptocurrency and stuff like that, it's just like everybody wants that. It's an instant, you know, gratification world. Like everybody wants things so fast and they want to, it's been that way for a while. And the problem is with that, and I've like once again learned my lessons is investing. I had an E-Trade account. I was one of those people.
Yeah.
So I'm guilty of it. And I would throw money at things and it would go up, but then I wouldn't know when to get out, and then it would drop down as fast as it went up, and it was risky stuff and but it was a lesson. It was a life lesson for me that I'm like, okay, um, I need to do something here. And I've also been burnt by financial advisors too. Um, and I'm not going to say names and go into detail on it, but there are things you need to look out for in your world as well. And
Yeah,
I,
for
I
sure.
actually, yeah, and I got sold a life insurance policy that was horrible.
Oh, a whole
Yeah,
life.
yep, yep, yep,
Oh man. Yeah.
and
It
and
looks good on paper though,
it
no,
it did. It looked great
yeah,
on paper, but I lost a lot of money on that one, and that was one of those life lessons that I had to learn the hard way, and I had to find a financial advisor that was trustworthy. And the one I'm with now, I'm building his house. So what, I mean, how much trust can you really have there?
right.
And great guy. But I'm seeing gains for the first time because I've been through probably I want to say three of them. And that gained a lot of distrust with me because I wasn't seeing any positivity. The first one I had really didn't give me any advice. I would just kind of tell this person where to put the money, and then I'd tell her that I wanted to take it out, put it somewhere else, and she would do it. And obviously, she was making money on every time I do that instead of telling me, no, you should wait. I never got that. So I
Mm,
want to get into that with you is like finding, because I know that's not who you are. I mean, I see the reviews. You've been doing this a while. You're obviously in business for a while and you have the reputation you do. Um, how do people avoid that? How do people avoid the people that are just selling the whole lives, people that are just there to make quick money, make money off of turn and burn investments, stuff like that.
right. I think there's a few things people could do. First would be to meet with a few different advisors before choosing one. I think is very important because you're going to be talking about a lot of things with your advisor, financial items, obviously, but a lot of life things come into it too. Um, a lot of my clients will leave. They're like, oh my gosh, I feel like I just had therapy. I feel so much better because they unload about they're worried about their child that's spending too much money or their spouse who wants to retire and they're not sure if they can afford that. So there's always like a lot of life things that come into it. So I think interviewing a few advisors upfront would be a great way to find out who you feel the most comfortable with, who you would trust, and also looking for a fiduciary, which a fiduciary means they have to act in your best interest. They're li legally obligated to do so. Um, so that means that they always have to put your interests first instead of their own. So looking for an advisor that's held to those standards is also a great way to make sure you're getting someone that's not just going to try and sell you a product or, be churning your account to make a commission.
You know how I know you are trustworthy too, right off the bat, is when I talked about whole life and when I was talking about the life insurance and you go, oh, whole life. That's how I know you're a trustworthy advisor.
Yeah, well, thank you. And sometimes I meet with people who have been contributing to a whole life for 20 or 30 years and they come in and you just have to kind of say, well, that was a great start. And now we're going to add to that.
Yeah.
And yeah,
Mine was a 1 year and I kind of figured out what it was and what I was doing and where the money was actually going for that first year too. So I figured a lot out myself and had a lot of other friends that were involved in the whole thing kind of get burnt too, unfortunately. But it's one of those life lessons I think that God puts in your path to kind of learn. And then he puts new people in your path to kind of help you learn even more, like yourself, and that are
right,
trustworthy, that are doing business the right way, and they're not just there to make a quick buck. They're there to help you.
right. No, that makes sense.
I wanted to let's talk about some of the biggest mistakes you see clients make in financial planning and like how you guide them to avoid those.
Yeah, I would say one of the largest is when the market is correcting or down for a certain amount of time, people panic and they want to sell their
Uh,
investments
uh,
immediately. And yeah, talking them off that ledge is where I think um, a lot of the value that they receive from me comes into play at that time. because a lot of times clients will be like, oh my gosh, the market's down 20, 30%. I can't take it anymore. I just want to get out. And that is honestly the very worst time you could sell your investments at a 20 or 30% loss. I'm always encouraging clients at that point, like, no, this is actually when you want to be investing more. You want to buy low and sell high,
Yeah.
not the opposite. So doing kind of a lot of hand holding during those market corrections, those times of instability in the markets when people are just scared. That's really what it is. It's a fear mindset that kind of takes over and they just get anxious. So just kind of reiterating what the plan is, that we've been here before. And a lot of times people will be like, yes, but the world's crazy right now. We have this going on and that going on. And yes, that's true, but we've faced a lot of things over the last 100 years. I mean, there's hundreds of disasters that we've had, and we've always rebounded. So I always try to just remind clients of that. This because one of the biggest phrases is, yes, but this time is different, when they don't think the economy will bounce back. And just trying to instill that faith that it will and just to be patient.
That's so good because I mean, first thing that came to my mind when you were talking about like the panic of things too, like every time I turn on YouTube, like I always if I'm at the gym or working out, I'll put on like YouTube and I'll put on something like motivational or whatever. But it's like you scroll through and you see markets to collapse, blah blah blah, sell now. The future is not, it's just like all these, and it's clickbait. I know that's why they
Mm-hmm.
do a lot of it, but they have these financial experts or gurus come on. And for the last probably 2, 3 years, I've been hearing the markets are going to crash. And I almost fed into it. I almost went to my guy and said, "Hey, like let's maybe we should just put this into cash and stay put for a little bit." But it's like you said, you can't let that stuff affect you. I mean, even if you turn on the TV and turn on the CNBC and all
Mm-hmm.
those, and they're talking about the doom and gloom of the markets too. That's how they get the watch. It's hard news sells. I mean, that's the thing. I mean, it's just bad
Right.
news sells. Yeah. And it's like, that's why they do it because they want to keep you glued to the TV. And that's why I just don't
Mm-hmm.
watch the news in general because it's all negative. Everything is negative right now.
Yes.
And it'll drive you crazy and it'll make you want to panic sell your stuff too because you're afraid
Yeah.
that, you'll see the banks, I saw something yesterday, or I think it was yesterday, where Bank of America, there was problems with there was a glitch in their
Oh,
system
yeah.
and people were
Yes.
seeing $0. And then they're saying, could this happen to other banks? Is the bank shutting down this and that? And people are start going into panic mode. No different than what's going on with the shipping problem too. Like
Right.
I have a 1 year old, or he's about to be one year old, and we can't,
Mm.
we're weaning him off of formula now, but we needed one can of formula, go figure, and it's sold out everywhere. Like people are panic buying the certain brand because it's from overseas, it's an organic brand or whatever. So there's none anywhere in
Oh,
Naples right
man.
now. Yeah,
That's
we
tough.
yeah, so he might be just going straight to whole milk. But but
Good luck.
yeah. But we have a little left, so we're okay, I think. But it's the panic that's created, like you were saying too, that forces people to probably call you and be like, "Hey, I need to sell this. I don't want to lose I don't want to lose all my money, this and
Right.
that." And what's your advice though? Because I think there's a lot of problems with people chasing the hype, on things too. They buy the hype and they buy it high because they're trying to ride the train up.
Right.
And then they get stuck and then basically they're stuck with nothing because they panic sell on the way down, they lose money and it's a constant this. What's your
Right.
advice to people like that?
Yeah. So what I typically do with my clients, people that are still accumulating for retirement, is typically have them just saving on a monthly or an annual basis, just consistently. So it doesn't matter what the market's doing, doesn't matter what the economy is doing at that time. We are just consistently following the plan that we have put together to get you to your retirement goals and kind of disregarding what's going on in the market, which might sound wild, but it works very well. And if you let go of that noise of the what's happening day to day, and you just remember that over the last 100 years, the market has averaged about 10% per year. And you just remember that, and just that's what I try to instill in my clients. Um, and also, when you were mentioning kind of chasing what has been performing well in the past, what I always say to my clients is we're using a very diversified portfolio, which means every time we look at the returns, there's going to be a clear loser in there and a clear winner. But
Mm.
that's because we are diversified. We're not going to get rid of that loser because he might be the winner in 5 years, if
No.
that makes sense. So we're focusing on different areas of the market, whether it's international, high dividend paying stocks, growth oriented stocks, et cetera. So we kind of have different focuses that we're on to diversify properly.
So how do people trust that their money is truly safe? I know that's like a problem with people too, is like when they put it in somebody else's hands, and and I agree with you 100%. It's the best thing to do is just to let a financial advisor handle it. It's a trustworthy financial advisor, I should say,
Right,
and handle it to where you do gain over time because money sitting in a bank account is usually just going to get spent and it's not going to gain anything. It's just sitting, so
right.
if you're not using it towards investments and so on, and
Especially with inflation the way it is right now. Your
yeah,
money in the bank could be losing value too.
exactly, and so it's
Yeah.
like how do people trust, that their money is safe? I know you talked about diversifying accounts and stuff like that, because people's biggest fears is they give it to you the next day, markets collapse, it's all gone, right?
Right.
So,
Yes. So in that kind of diversification example we were just talking about, in most of my clients' accounts, they own probably about 400 to 500 different stocks that are
okay.
all within the ETFs or mutual funds that we are using. So therefore, let's say, Apple has some kind of major issue where their stock price tanks. Well, we own 399 other stocks within that portfolio. So we might see that Apple will drag it down a tiny bit, but those other companies are there to rebound and pull the accounts up.
That
That makes
makes
sense.
sense. Yeah, that makes sense. Because I mean, I think people, as they view financial advice, like their money in accounts, they just think it's in one big thing. And then if one thing collapses, then everything's going downhill, which isn't the
Right.
case.
Right. And in that example, let's just say there are about 400 individual stocks comprised in those ETFs. I always say if all 400 of those companies went out of business, we probably have a lot bigger problems on our hands. That probably means like we've been invaded by aliens or like something wild has happened for 400 of the biggest companies in the US to go out of business in one day.
So yeah, that right there is your peace of mind. I mean, because giant companies, the biggest companies in the world, would have to completely collapse or go out of business for your money to go kapoof.
Correct. Yes, exactly. Right.
Um, I wanted to talk to you too about like given the economic climate currently with all the craziness going on, shipping stuff, weather changes, all the craziness we're seeing on the news. Obviously, a big election with craziness there. What should people be aware of in terms of, the interest rates, inflation, and the real estate market in general? Here in Southwest Florida or throughout the country. I mean, it obviously the real estate market has changed. Real estate selling, it's kind of gone normal in my opinion, back to
Hmm.
normal. It's not where you can just walk in a house and open the door and somebody's like, "I'll give you 100,000 over asking" anymore. So realtors are actually having to put in some work now. So what would with given that economic climate, what should people be aware of?
Yeah. So it's actually interesting because at the end of last year and the beginning of this year, I did a lot of education with my clients about election years and just said, hey, typically during an election year, we see a lot of volatility in the markets leading up to the election, meaning that the accounts might go up and down. We might see very large swings. However, this year it's been fairly stable. The market
Mhm.
keeps making new highs and has done very, very well. So it's not what you would typically see in an election year. Um, but I think part of that is due to inflation because inflation, those costs, like we were saying, do get passed to the consumer. So a lot of companies have raised prices. So their stock prices and their profits are still doing well. So they're still increasing in value.
That makes
Um, yeah, and I think it'll be interesting to see where interest rates go over the next year to 18 months with that first cut that we had just a couple weeks back. So I think it'll be interesting to see kind of how that propels the real estate market if things do pick up again or just kind of stabilize into a more normal type market, like you were saying, not kind of like that 2020, 2021 kind of frenzy that
crazy.
we saw. Yeah.
I I think, it's in the building world too. It's always been during election years where things kind of, in my side of the building world, maybe probably in general, but it's always been things slow down a little bit. People, I think, are a
Hmm.
little bit more cautious because they're wait and see more than ever. It's like I'm talking with a lot of clients, but nobody's really moving forward. Like we have proposals, and it's kind of just it's been a weird year. I mean, they're ready to go, but they're not going. And it kind of always happens in this way. And it's like I think a lot of people out there, and it's in a lot of industries. I've talked to a lot of people in construction. They're picking up now more towards the end of their seasons, especially up north people, contractors. I know a lot of paving guys and so on too, but um, it's just kind of how it is. But after the election's over, there's usually probably a frenzy because people see what happens, unless some big global event happens like war or anything like that. Uh, which it is kind of scary times now with that whole aspect of things, but obviously wars being fought in different ways where they're just shipping boatloads of money to other countries too,
Yes.
causing more inflation. Um, how with inflation too, how do you see the financial world with the amount of money being printed too? How do you see your world getting better? I mean, is it a negative that they're printing so much money right now? Is it, how do you see things with that?
Yes, I think inflation is one of the biggest concerns we could have for the market in general. Way more concerning than a recession would be because a recession typically is kind of a short-term time
Mhm.
frame and then the economy rebounds. Where inflation, if you look at other kind of South American countries where they've had insane inflation, Venezuela pops into my mind, where they've never been able to rebound from that. So I think inflation and the printing of too much money is a very large concern. I think one of the ways we kind of got into this situation was the kind of COVID situation of 2020. Obviously, no one really knew how to handle that.
Yeah.
I don't know if we can fault, the Federal Reserve or the government at that time for doing what they thought would be helpful to kind of keep everything moving along. Maybe they should have stopped it a little bit sooner, but again, hard to know. And we've first kind of global pandemic that we've all been through. So,
Yeah, it was a learning curve for everybody, obviously. Do you think, they should I've heard different things like, some people have said maybe they should stop printing money in general for X amount of years to kind of reduce everything, but they still are printing, which is causing more. Um, I mean, I just heard egg prices are going up again. It's like it just
mm,
never ends, it feels like. And um what do you think would be the best? I mean, you obviously can't predict the future, neither can I. But what would you think would stabilize this as a financial advisor? You're more in the finance world than me, so I'm just curious if you have an answer
Yeah,
to Jerome Powell.
right. Less printing of money would definitely be a benefit. I also was a little bit surprised that they dropped rates already a few weeks ago when they did, because the inflation numbers, they have come down, but they're still not where they wanted them to be. So for them to now start decreasing rates just kind of surprised me a little bit. So I'd be curious to see what the next inflation numbers look like after the Fed did that, to see if they continue with that path or if they maybe hold off for a little while.
Do you think the costs basically now that we're seeing are pretty much the norm now?
That's hard to say. I'm not sure because it does look like some things have come down when I go to Publix, knock on wood. But you know, it, I don't think wages will be able to come down. I don't know how you could ever do that to an employee. So given that factor, it might be hard for businesses to drop the price of what they are selling items for because they have to continue paying their employees this higher wage.
Mm, yeah. It the wages portion of it too. I mean, it's just like our pay towards our employees obviously has just gone up tremendously too. Like, I mean,
Mhm.
we're having laborers, which is the starting position before advancing up into the field, starting at $20 an hour. And
Yeah.
I was a laborer for a lot of my life. Obviously, my dad paying me probably paid me next to nothing now that I learn about this. But I was like and also it was a while ago, but it was $8 an hour, $10 an hour. That was my dad. It
Right.
was family. It was probably uh, just because it was my dad. But
Yeah. They're
uh
like, well, we're gonna feed you dinner tonight and you're gonna have
yeah.
a bed to sleep
We got
in.
a
So
roof over your head, so
yeah,
you
you'll
get
be
this.
just fine.
Yeah,
Yeah.
exactly, exactly. To wrap this up with you, this has been awesome. I wanted to kind of ask you too, if you can give one piece of financial advice to your younger self, what would that be?
Oh, to my younger self. I guess get more comfortable with budgeting earlier. I know that sounds super lame and that's not a fun answer at all, but I think knowing what um, funds are coming into your household and what's going out and where they're going is very important. I don't think a lot of people have any idea of what they're spending on items. So I think looking at everything that's coming into your household for the month and then allocating how you want to spend those funds ahead of time is very important instead of looking back at, oops, this is how I did spend them. So kind of being a little bit more proactive, um, I think would be great advice for anybody, myself in general. And
It's great advice for me because I think a lot of people need to look more into their budget and what they're spending money on and what they're not. I mean, it's like going to restaurants and stuff like that. The cost is astronomical now just to go out to eat. It's just crazy to me. Like you
yeah.
buy a drink and it's $20 now. And,
Hmm.
the food is minimum, like, especially Naples is minimum like $40 and all that. But it's like,
Yeah.
it's great advice. Like people need to budget better. What's some advice on that to wrap this up? Because that was such an important topic too, and I hate to just go right over it. Like, what is your advice as far as budgeting that they should do?
Yeah, I would find some kind of system that works for you or your household if there's a spouse involved. I personally use a budgeting app that I find very useful. You can link your credit cards and debit cards to it. So anytime you have any spending, it hits your budget. You have to kind of categorize it. This might sound tedious, but once you kind of get the hang of it, if you probably spend 15, 20 minutes a week just kind of maintaining it, it's pretty simple. So I think that would be ideal for most people to do because if you look through your bank statements and you see what you spent out at restaurants in the last month,
Yeah.
or depending on what your thing is, but I enjoy going out to eat. Sometimes that can be painful. You look back and you're like, holy cow, you know, um, we could have done something probably more impactful with those funds.
Yeah, I'm the same way. And then it's like you look at the monthly bill and you're just like, where did all this spending? And then you go into the details and you're like, oh, there it was. Yep, restaurant, restaurant. It's just like, man, the amount of money you spend on restaurants these days is just crazy, but it's all budgeting. And I agree with you, like doing some sort of app. There's a ton of apps out there
Mhm.
now that can track everything and they'll alert you of where you're spending too much and so on and organize everything for people to where you don't have to have your checkbook anymore and write notes into that.
Exactly. Yeah, you don't have to do it yourself anymore.
Yeah. Jamie, this has been awesome. A lot of great info on here. I appreciate you coming on too. Before we go, where can people connect with you?
So my website is burgerwealthmanagement.com. That's a great spot. I honestly don't do a lot of social media. I don't do any for my business anymore. There's a lot of compliance issues for financial advisors in that aspect. But yeah, my website's a great place to go. It has my email address on there and phone number and all that.
Love it. Love it. No, I appreciate you coming on. This was really good. A lot of great info. I know the audience will get a ton of value out of it. So thank you for this.
Thank you. I had a great time.
So, with that being said, thank you all for listening. Please share this show. This one, definitely share because people need financial help, especially in these days. So, take time, share it with your friends and family. Please like, comment, and then obviously subscribe. And please 5-star review because that's what this one deserves. And I will see you guys on the next episode.